Hey everybody, welcome back to FSP Forex Stock Predictions. Hope you are all having a great day. I am the Vortex Trader, and today we are looking at a breakout on GBPUSD in the 15-minute time frame. So let's just jump right into these charts. Okay guys, so at the time of recording this, you can see there has been 1, 2, 3, and we are currently on the fourth candle since the London market opened up. Now this is the 15-minute time frame, and this is a strategy that I have been using for quite some time. If I scroll back on these charts, and I know it's going to look pretty messy, but all of these areas where you can see text is all previous trades that I have been taking, right? For quite some time. Look at that. That just becomes a gigantic mess. But this is because I have been using the exact same strategy with the exact same rules. Now, that doesn't mean that every single trade I have taken like this has won. Nope. We definitely have had some losers in there, but for the most part, we have been consistently profitable using this edge. And for those of you that are newcomers, allow me to explain to you how I trade this particular strategy. All right, so far we are in drawdown on this particular position, but I have taken it, I have sold. And how I generally like to trade this particular setup is the following. What I look for is a range that has been set during the Asian session. I look for some sort of support and resistance zone that has been respected during the Asian session on the 15-minute time frame. Once I have seen that, I go to a higher time frame. I go to the 4-hour. Now, the 4-hour, as you can see, now this screen was posted yesterday on YouTube and on our LinkedIn pages and on our other social media pages, and it shows my order block strategy. So on the 4-hour, I enjoy trading an order block strategy. On the 15-minute, I like trading a London or a New York breakout strategy. The green indicates winning positions. The pink are losers. So you can see I did have a winner yesterday, which actually this wick right here gave me a win with a 1 to 2 RR with this order block. Let me put the short position tool in there. The stop loss was a couple of pips above the very most top wick of the order block itself, and I targeted a 1 to 2 RR, and we can see we wicked nicely through that. Right, my reason for jumping to the 4-hour regarding the 15-minute strategy is that we like to form a bias. We need to see, are we long or short? Are we looking for long positions? Are we looking for short positions? Are we ranging? What is the story? All right, what I see is we were ranging, we made a lower low, we broke out. We tried to come up, we collected some liquidity from this order block right here. We then formed a lower low. Now, are we going to continue going lower? That is not for us to determine, but it has helped us decide a bias. We do have a reason for looking for short positions on a lower time frame. So I jump back into the 15-minute time frame, and so far we can see that this particular position is currently trying to make its way back up. It's all right. So what do I look for, right? I look for a breakout candle as soon as London starts. Now, generally, we won't see a breakout candle as the London session starts. We might see it a couple of candles afterwards. Sometimes we won't see it at all until maybe a couple of hours afterwards. Sometimes we'll see it during the New York session. Sometimes we won't see it at all. But if we do see it, and if it is clear to me that it is the type of breakout that I'm looking for, I have to jump into the trade because that is what my rules stipulate for me. All right, so the range that we were looking at is clearly price was ranging between support and resistance for quite some time. And during the Asian session, we formed this nice little, we can call it a triangle. If you guys have ever watched any of Al Brooks's technical analysis, I implore you, please go check him out. He is a master chart reader, master at price action, And this sort of setup is similar to what he enjoys trading. We look at some sort of trend line, we look at some sort of triangle formed, but we only care about the bottom line. And we want to see a minimum of 3 taps. Now, generally with my breakout strategy, I like to see a minimum of 3 taps before I see a breakout candle. All right, and if I see that, which we have 1, 2, 3, we can see it on the horizontal line. All right, the third tap was not on the horizontal line. The third tap was on this ascending trend line. So we have 1 tap, 2 tap, 3 taps. This region, the London market opens up and we see a big breakout. Boom. So this gives us reason to jump in. So how do I jump in? Right? The candle itself, the breakout candle itself, is a great breakout candle because it has no wicks to the downside. It closed right at its low. Okay? And what I do is I enter with a market order as the candle closes. So the candle closed right at its low. We enter with a market order. My stop loss goes a couple of pips above the very most top point of the breakout candle, and I always target a risk to reward of 1 to 2. That is just how I like to do it. With this particular strategy, the predetermined targets are not based on previous price structure. I base it on the RR itself. I need to have a 1 to 2. That is what I look for. That is what I use. I use a very similar one for the DAX 40, and the same one is used on GBPUSD. So currently what we are seeing is that the trade is open, however we are in drawdown. Now this moving average so far is posing as a resistance, and what I am hoping is happening, and remember, hope in the markets is just a 4-letter word, it means stuff all, is that the price is coming up just to retest this previous resistance, this previous support as resistance, and then price will continue its merry way down south. All right, now this is my plan of action. Whether it works or not, it doesn't matter. Right? This is probably my main message that I try to get across to you guys is once you have a strategy that you have back tested countless times and you know is profitable in the long run. You've back tested it, you've forward tested it, you've played with it on a demo account, you've played with it with live money with maybe very small lot sizes, right? Very, very small, and you know it works. Then it doesn't matter if this trade is going to be a loser, because over the long term, you will, if you journal and take a snapshot of every single trade you do using one particular strategy, you'll see that it will be profitable in the long run. So I'm not worried about if price decides to carry on up and stop me out on this particular position. As long as I have entered the trade correctly and I have followed my rules, that's all I can do. As a trader, that's all we can do, right? That's our job. We don't have any other job, right? We cannot become indecisive and start mming and ahhing and looking for reasons not to take the trade because it doesn't quite fit everything we've done. No, if it fits all our rules, if everything is there that's supposed to be there, if all the reasons line up, if the stars align and they align and tell us, listen, trader, you have to enter this position now because your setup is here and it has presented itself to you on an open platter, then you have to say, thank you, stars aligning, thank you, universe, thank you, charts, I'm going to enter, regardless if you win or lose. All right, and it is great training as you trade. Because the more you trade, the better you get, right? And the better you get, you actually become better within your own mind. Because when you are trading, yes, you might be trading against the entire world, trading the same pair as you, and you might be trading against institutions and market makers and major banks. But your greatest enemy when you are trading is yourself. You're trading against your own mind. That's really who you're trading against. And you want to make sure that you can beat your own mind, right? Sounds weird, but it is so true. Because there might have been a lot of traders that as soon as this trade gets into drawdown, they freak out, they exit the position, and then next thing the trade does dip lower and hits target, right? We have a stop loss set in place for a reason, right? If the strategy called for our stop loss to be set here for whatever reason and we got stopped out, that's fine. But don't go against your rules. unless maybe there is some news coming up and you're watching the fundamentals and there's something telling you get out of the position if X happens. Close the trade if X happens. That's fine. If that is a part of your rule setup, then do it. But if you don't have that, then don't do it. Okay, that's all I'm trying to say, guys. So, with regards to the breakout strategy, this is it. It's very, very simple. We just look for a breakout candle at the London Open or a couple of candles after the London Open. If there is no breakout candle, we carry on watching it throughout the day. We will set alerts, but we need to make sure that there is a support and resistance zone that price has been respecting before a breakout candle occurs. Okay, guys, so what I'm going to do is I will post a picture on our YouTube and LinkedIn once this trade has either been stopped out or hit target, and you guys can see the end result. And on that note, let's wrap up today's video. I want to thank you all so much for watching. If you enjoy these videos and you find the information helpful, please would you go ahead, hit that like button, hit that subscribe button, leave us a comment in the comment section. I'll be sure to get back to you. And as always, I will be seeing you all in that next one. Thanks for watching.